Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is a 4-hour chart of DXY, and DXY unexpectedly showed some good recovery. And as you can see that right now DXY is standing at 105.25, the resistance level that we have been discussing for the last 2-3 days. So DXY is trying to regain the lost position and trying to go up again. So right now DXY is standing at a very crucial level. If DXY breaks 105.50, then maybe there will be further upside on DXY, further recovery on the chart of DXY, and if that happens to continue, then yes, we will see further selling on the chart of euro dollar, GBP USD, and mostly gold. My dear friends, yesterday, to be honest, I was not expecting that dollar would show this kind of recovery and gold would fall. Okay, so as a result, SL was hit also. Can't help it. Let's see how the market will perform today. So first of all, US services industry regains steam, factory orders accelerate. Okay, service industry activity picks up in November, employment rebounds, supply delivers improve. Factory orders increased 1% in October. So as you can see here, US services industry activity unexpectedly picked up in November, and this was the main reason we saw a big recovery on the chart of DXY yesterday. Okay, overall the chart was very weak, but we can see that bulls are back in the game again and they are trying their best to take the market up. So as a result, okay, those who are holding buy positions like me, okay, the SL was it. I had a buy position on 1778, but to be honest, I was not expecting that market would break the level. But as you can see right now, gold is trying to recover again. So let's try to understand the levels one by one. First of all, if I take you to the 4-hour time frame, then we can see that yesterday it was a double top kind of a pattern. Okay, and to understand the levels better, okay, I would like to take you to the 1-hour time frame. Okay, because most of you prefer to take position on the chart of gold for day trading purpose, so as a result 1-hour time frame will suit you best. Okay, so when the market fall, we saw market taking support at the 200 moving average, the dynamic support, though we had a very strong support zone around 1778 1780. Okay, but market broke the support. So and right now we can see the market is going up, and right now gold is standing at 1772. This is the current market price. And as we all know, previous resistances become support and support becomes resistances. So, and DXY is also standing at the resistance right now, previous support which is now acting as resistance. But if you look at the chart of DXY, okay, then obviously there's a possibility that DXY may break the resistance and show further upside, especially during the European session or US session. But as of now, okay, as of now 1778 to 1783 is the resistance, or not a very strong resistance but a minor resistance for gold. If gold goes up, also be careful in this zone, especially during around 1778 to 1782. There's a possibility that market will face some selling pressure, and if market reverses, you can go for a sell position. But right now I'll request every one of you to reduce your lot size. Let's say you usually take a lot size of 0.5, and right now in this market situation, try to reduce the lot size by 50%, or try to take a lot size of 0.2, or if you take a lot size of 0.1 usually, then try to take a lot size of 0.05, because see, right now we are not very sure about the levels. We had a strong level and it was gone, so right now we don't have any strong level right now. Okay, so be careful. So 1778 to 1783 is the new resistance for the market as of now, but this is not a very strong resistance. And if the market falls, okay, if the market falls, then I think this time market will test 1763. Okay, 1763, because we have some support around this area from the Fibonacci. Okay, and apart from the Fibonacci, we have the trend line also, which is still very much relevant. We can see the trend line is acting as a dynamic support for the market as well. So first minor support will be 1763. Okay, around 1763, because these levels do not work as a particular level, they work as zones in the market. So 1763 will be the 1763.64 will be the first level where you need to observe the market. Observation will be very important, and especially the volatility will play a big role. In case of good amount of volatility, market will break each and every level. Okay, in case the volatility is low, if you see market flat, then you can expect the market to bounce from 1763.64 level. In case market breaks 1763, the next buying will be around 1750, around 1750-52 level, around the trend line, because the trend line we can see acting as a dynamic support for the market. Okay, so this is a very weak support. Trend line is more or less a good support that we can see. Okay. But apart from that, we have also support around, good support around 1750. Okay, 1750 to 1747. So why 1750 to 747? As we all know that the round figures work as psychological support and resistances. So 1750 is a psychological support, and 1747 we are considering 1747 because of, let me show you. Because of previous price rejection around this area. Okay, then we have Fibonacci 38.2% retracement level, and the level is 1740 to 1735. So to be honest, the chart is kind of messed up. Okay, to be honest, this chart is kind of messed up. So if you want, and I can write down the numbers. Okay, give me a few seconds to cut down the confusion. Okay, I have a list. So we have a resistance around 1778, 1783 because of previous support to act as resistance, but this is not a very strong resistance. It is a weak resistance, so be careful. Then we have support, first support around 1763 because of Fibonacci 23.6, and to be honest, not a very strong level because market is forming lower highs. Secondly, we have the trend line as support around 1755-56. Okay, observe the market, observe the market. If you see market taking support and bouncing, then only go for a buy position. And in case DXY tries to regain its position, if it tries to recover, then obviously market will break. Third is 1750 to 47. We are considering 1750 to 47 because of psychological support and previous price rejection around that area. Then support 4, the fourth support, the best support as of now is around 1740 to 35 because of Fibonacci 38.2% retracement level, as well as previous price rejection around the area. In comparison to Fibonacci 23.6%, Fibonacci 38.2% is much more reliable, especially when the volatility of the market is high. So these are the levels. Okay, you can take a screenshot, pause the video and take a screenshot. And again, I'll say try to reduce the number of the lot size. Okay, because right now we don't have any strong levels. Okay, so please be careful. Okay. Anyways, hopefully you got my point. This is my analysis. I can be wrong as well. So please follow proper risk management. Bye bye. Take care.